All right, so you've set up the initial company file. You put some of the basic data in there. The bigger part about setting up a QuickBooks company file is to put in the beginning information. So it's necessary for you to identify what you want your chart of accounts to be in starting. So if we go to Lists in QuickBooks, to Chart of Accounts, QuickBooks will set up a default chart of accounts based upon the type of company that you specified. See, I specified accounting, so it put in a couple of accounts in here. But I may want to change or modify or delete, and that's very simple. You just simply go, if you click on an account and go to edit the account, then I could change it, and I could say like bookkeeping. Income, okay? And if I save and close that, it will modify that account. So I can go through and identify in more detail or in less detail than what they have here, the type of accounts that I want to or need to use to create my company correctly. The next part is entering in historical data. So you can actually, if you're going from one system to another system, like not QuickBooks into QuickBooks, you could put things into an Excel data file. And if you create that data file properly, you can then come over here and import that data file. So you can import Excel files and IIF files. That's the primary two that you're going to use. So in an Excel file, if you do this process, the way you do it is you start by going into this tab right here and you identify exactly how it wants you to set it up. Okay? It will have very specific format that you need to go into to bring in customers, to bring in any of these things that it says here based on the way you set up your company. Okay? And then you go into your Excel file and you export things out of your existing company, and then you can import them into this company. All right, then next you can, if you have an existing company file and you're going to go and create another QuickBooks file, you don't have to start it all from scratch. You can go in, if there's stuff that is good, like the customer list, the vendor list, the employee list, the chart of accounts, and all of these different lists, if those things are good in the old company file, you can go to the IIF and here, and you can, or excuse me, you can export them from the old company. You could create an IIF file in the old company, and then you can come into this company and you can import the new company. So if we wanted to export an IIF file here, these are all of the things that we can export. And you can look through them and say, okay, I can use my customer list still, and I can use my vendor list and my employee list, but I don't want to use X, Y, and Z. So once you click on those, it will create a data file. Save that data file to like your My Documents folder. And then come into your new company file and come over and import it, the IIF file, and then you'll just locate that file and import it, and boom, a whole bunch of data now resides in QuickBooks. So if you're going from one QuickBooks to another, that's an awesome tool to use. If you're going from another company file to this company file, that's another one to use. If you're just using things in Excel and you've got like a check register in Excel and you want to bring a large check register in QuickBooks, create it according to the order that it needs to be, according to the way the Excel file says to do it, and then you can import. You need to know that once you do an import of any particular type of file, like of these kind that exist here, once you do it, you cannot do a second import into the same database. So get everything onto one Excel spreadsheet for all things customers, and then bring it into QuickBooks in one Excel file. All right, so next, you would create opening balances, and this is kind of a complex process. It would involve doing potentially a journal entry. So when you do a journal entry in QuickBooks, you might specify like the checking account and put in the balance, which we haven't set one up here, but whatever it be. If you have furniture and equipment, you can say, well, we have a total of $20 in furniture and equipment, and you can put notes like this is from the old company. Coming into QuickBooks, and or what the assets are, like chairs, right? And then you can enter all these things in. QuickBooks and accounting principles automatically creates a balanced journal entry between debits and credits. But as you start entering in more and more assets into QuickBooks and liabilities, like you know right now you owe $2,121 in payroll taxes, right, from the previous quarter, so you'd put that in there. And see how it continues to create a balanced journal entry so that debits and credits balance out. As you continue to enter more and more things into QuickBooks, though, you're going to have different balances, or excuse me, you're going to have a different balance in the end. And what account do you use? If you had, like right here, it says, well, here's this balance of $22,000. Where do you put it? To start and open your company, you put it to opening balance equity. All right, and that balances your journal entry. That is the entry that you use, opening balance equity. So you enter in all your assets or things like that in that fashion, and that will get you started. That is one way to do it, okay? Another way to do it is when you go to create a bank account, like if we go to the chart of accounts, and there's not a bank account in here, so we're going to create a new account called a bank account, and we're going to continue, and we're going to call this the U.S. Bank, right? And remember I said don't put bank account numbers in there. At this point, I would put a bank routing number in there, but I can enter an opening balance. So I might go to my bank statement ended 12/31/15, and excuse me, that's the balance. So that'd be beautiful. Is that much money? So if we had that much money in there, and as of 12/31/15. As soon as we put this in, it literally creates a journal entry, and it's a debit and a credit. So this is going to debit that cash account by $2,121, and then it's going to put a credit into opening balance equity. All right, as soon as we hit save and close. So your opening balance equity account continues to get updated, you know, again and again as you do that. Now this is if we were going to do online banking, don't want to do that. But if we look now at the chart of accounts, you'll see that there are balances in these accounts because we have done this activity. And the corresponding entry for all this stuff is to have the adjustment in the opening balance equity for everything that exists at this point in time. All right. When you get done with this, you should know that the chart of accounts would be all set up. You'd have whole bunches of assets and liabilities and equity that you would have entered into QuickBooks. You can go and view the chart of accounts by looking at your list reports. So the account list, and it will show all of the accounts, and then you can print that list, and you might use that to compare it to your old company file. This in QuickBooks, these lists that you have, you should also know that they can be organized however you like by simply clicking on the very top line here. If I click on name, it's going to organize this instead of the way it is. It's going to organize it alphabetically. And now it doesn't matter whether it's an income or expense, it's just an alphabetical listing of all the accounts. And then the type of account, it will organize it according to assets and liabilities and equity on a balance sheet, and then income, cost of goods sold, and expenses, and other income and expenses on an income statement. And then if you organize it this way, it's going to go from smallest to largest, or vice versa, from largest down to smallest. So anyway, there's great ways to maneuver the list, and the nice thing is you can do this with any kind of list. When we go into the other company file, we'll see a lot of lists, and in those lists you can actually organize it however you however it serves your needs, or to find things quickly. So there we are for the additional aspects of setting up a company file.